Apartment development is back in the Phoenix metro area. It took a while to get going, but lately we've seen a pretty rapid acceleration in construction activity. What impact is that having on the market? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Phoenix update. At the height of the previous upcycle back in 2007, we saw elevated apartment construction levels in markets all across the country, and that became a big problem obviously when the recession hit in 2008, 2009, and from there, construction activity dropped to 20-year lows in many spots across the country before coming back very quickly, ramping back up to 20-year highs now in many cases. But in the initial surge, we saw construction activity primarily concentrated in some of the core markets nationally. Some of the bubble-busted markets, like Phoenix, were much slower out of the gate, but now that is changing. Take a look at this chart showing ongoing construction activity by quarter in Phoenix, and you can see that after bottoming out near zero in 2011, Phoenix is now seeing a remarkable surge in new starts. Construction is coming back almost as quickly as it went away, as you can see from that V-shaped pattern. Now, we aren't quite back to pre-recession peaks, but we're getting close. At the end of Q2, there were nearly 11,000 units under construction in the Phoenix metro area. The previous peak was around 13,000, set in 2000, 2001, and again in 2008. So don't look now, but Phoenix is back among the nation's leaders for ongoing apartment construction. It ranks in the top 10 for total construction volumes, and it's about 100 basis points above the national average for future inventory growth rate. So what effect is this new wave having? Well, so far it hasn't hurt much, and that's partly because so far very little of this new product is actually completed yet. Furthermore, we're starting to see demand accelerate again, not to especially impressive levels, but certainly to solid numbers, and that corresponds to job growth that has been solid, though not spectacular of late. Certainly Phoenix isn't adding jobs at the pace we saw in the mid-2000s, but it's growing at a solid rate. So given the moderate demand and minimal supply so far, apartment occupancy continues to trend upward, up to 93.7% as of Q2. That was up 60 basis points year over year. And you can see that's a 7-year high, but still well below the previous peaks. And now the better news is that rent growth is accelerating. Year-over-year rent growth measured 3.7% as of Q2. That's well above the pattern seen over the past couple of years, and it's even 20 basis points above the U.S. average. So the question is, can apartment fundamentals remain healthy even as supply volumes start to climb again? And well, then there are a couple of things that tell us the market should do okay, even if job growth continues at only a moderate pace. Most importantly, construction in this cycle is generally concentrated in the right submarkets, primarily the eastern suburbs, where the demand drivers are much stronger and where the shadow market of single-family rental homes doesn't play as much of a role. Now, that wasn't the case in the previous cycle. Back in 2007, 2008, much of the construction and new development was concentrated too much in the speculative areas and in the lower performing submarkets. Additionally, we are finally seeing a slowdown in distressed home sales and in the growth of the shadow market rental pool, and improved stability in the single-family sector should help stabilize apartment demand across the market. Overall, then, our baseline view is that the Phoenix apartment market continues to see occupancy in the 93 to 94% range, so pretty much stabilizing from here, and that rent growth hovers right around 3%, give or take a little bit. Of course, that outlook could change if construction continues to surge to much higher levels, or if development activity picks up significantly in the less desirable submarkets. And that wraps us up for Phoenix. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.